All right, YouTube, Jay Athens back again with another video. And in today's video, we're going to talk about the difference between a trader and an investor. Now, there is a difference between the two, and just understanding the two could save a lot of traders' accounts. You know what I'm saying? So let's talk about it and let's get straight into it. All right, so a trader versus an investor. And remember, once again, I'm giving you everything from my perspective. So don't put in the comments, oh, I'm wrong. This is all from my perspective. So I always got to throw that disclaimer because you might have someone, or two that's trying to be slick in the comments. So let's talk about it. And number one, a trader. What is a trader and what's an investor? Now we're going to base everything from the Forex market because I know there's a lot of people within that market. And this is how you're probably going to understand what I'm talking about. So now when we talk about a trader, there's a couple things we can say about a trader, right? We can say that number one, they're short term, and number two, their outlook is, mainly on a 5 to maybe a 30-minute chart. And most traders in the market, they chase the market. You know what I'm saying? There's a lot more to the markets that you need to understand. This is why it's important to look at the markets, not just from a technical trader environment. Now, when we talk traders, what do? They wake up, they look at a chart, they'll look at certain support and resistance, which is fine, do as you please. Now, a lot of traders, they're going to do that on a 5, 15, or 30-minute chart. Now, doing that, you have a short-term outlook, and it's almost like gambling. So, a lot of people might be hurt behind that. It's gambling, you guys. You have to understand what you're doing because think of this. If you make money, right? If you make money today as a trader in the market, you can make money tomorrow. You can make money the next day. The fourth day, you could probably lose money, right? Because you're entering the market every single day for those 4 days. Now, number one, here's what a trader is going to do. A trader, as many times as they enter on those 4 days, if they enter 5 trades a day, that's 5 spreads and 5 commissions to the brokers. So that's why the brokers, they love traders. And doing that, you're essentially paying the broker for every position. So if you're doing this day 1, you make money. Day 2, you make money. Day 3, you make money. Let's say day 4, you don't make any money, right? Day 5, you start to lose money. The point where I'm going with this is that as a trader, you have to essentially wake up every day, put money into the market, right? As far as the direction, go 50-50, long or short. You got to put money into the market to make money. So just look at it in this sense. You might be 25 years old, right? How long are you going to be a trader for? Are you going to trade the markets until you're 55 years old, doing the same thing over and over again? You're telling me you're going to be 50 plus years old looking at a 15-minute chart? So this is the point of this video, a trader versus an investor in the Forex market. A lot of people look at the Forex market and think that it's something that you have to get in every day and make money like an ATM. Well, that's how it's promoted. Now, you have to look at it from an investment standpoint. So that's a little bit about how traders approach the market. They'll get in at any time of the day, 3 in the morning, wherever time of the day they see fit without understanding the volatility environment. Now, here's what the investor is going to do. The investor is going to understand that if you're looking at currencies, let's say Euro versus USD, the investor is going to understand that each currency offers what we call an interest rates. Now, don't sit here and say interest rates are not important because that's one of the main drivers of a currency is interest rates. Now, an investor has a 3 to 6 month outlook, right? They're willing to put money into the markets, right? Let's say you're trading a currency pair and you pay that one spread and commission. Let's say you take one position, but you're looking to hold it for like 3 to 6 months outlook. Now, what is that investor's mindset for him to even think about holding it between 3 to 6 months? Well, there's certain drivers he needs to look at. He needs to look at what is the interest rate of those two currencies. And you need to understand the fundamental drivers behind the currency. So we're talking, GDP, what's the inflation? What's, like I said, the interest rates. What's driving that GDP? What's the unemployment rate? So many other factors that's going to lead that trader or that investor to hold it for 3 to 6 months. Because an investor is going to ask himself, just like any other investor, guys, right? An investor is going to ask themselves, okay, what's the cost? What's my return? Why are you guys not looking at the Forex market in that sense? Because every time you take a position, you have to put down margin, right? So what's the cost? What's the return? There's a lot of people here. Let me give you a quick example. There's a lot of people, right, that will, let's say, Euro ZAR. That's one of my favorite, interest spread pairs. Euro is touching really negative interest rates. The headline interest rates are going to say 0, but LIBOR rates show that Euro's in negative 0.5%. Now, the money's cheaper, correct, right? It's cheaper to borrow that money, Euro, right? But if you look at the ZAR, South Africa, I think their interest rates are at 3.5%. Now, as an investor, if I'm looking at Euro ZAR, 0%, 3.5%, where are you going to stick your money? Wherever the higher interest rates are. Because why? It yields you a higher interest to hold that currency pair. So why should I be going long Euro ZAR, especially in low volatile environments? And that's another thing that traders don't understand is you need to understand that the market gives you environments. If you don't understand the environments, you're going to lose a lot of money. You're going to lose money. No ifs, ands, or buts. You can have 2 good days and then after that 2 bad days because you're trying to do the same day trading strategy or scalping strategy when volatility is really low. I'm looking at my other screen. We had volatility low since, let me tell you, we'll say April, the beginning of April. Volatility's just been low across the board. Just been low. We had a few spikes here and there, but overall, in this low volatile environment, it calls for an investor mindset because in low volatility environments, big institutions are looking for who has the higher interest rates because that is where the money will flow. So there is a difference between a trader and an investor, guys. Understand this concept. Hopefully this video gave you some insight and, I don't want to make this too long because I want to give information just straight to the point to the people. If you're willing to take your knowledge from a trader to an investor, I highly recommend, guys, May 10th, my macroeconomics training. I will teach you how to become a trader, from a trader to an investor, how to look at the markets based on interest rates, how to position yourself based on where volatility is in the market. Because guess what, guys? The VIX or the volatility in the market only gives you a small amount of opportunity to actually scalp and day trade the market. So if you don't know that, you're not understanding that the market is really low. The more traders that come into the market, the more money that gets dumped in, guys. Guess what? You're going to keep volatility low. So if you don't have that investor mindset to look at currencies from a interest rate standpoint and understanding other macro drivers, you're going to be up and down, up and down. And like I said, you're going to be 25 day trading and you're going to be 55 still day trading of 15-minute charts because it brings you $2,000-$3,000 in 5 years.
On the vaccine rollout, do notice a UK study finds that people who have had only the first dose of the Pfizer vaccine do remain at risk from variants. As a UK study, people who have had only first dose of Pfizer vaccine do remain at risk from variants, according to a study in the UK.
Invest into something.
See a bit of downside in US equities on the back of this.
Go enjoy yourself on the beach.
Again, I do believe there were some other studies in recent weeks. This suggests it would be about 64% effective after the first dose.
A lot of people, a lot of day traders doing this, looking at the screens. This is it. You'll see them do this. But an investor is going to do what? knows that he's positioning himself and understand where that economy is. So he can ride that out for 2-3 months, 4 months on end. So understand what I'm telling you guys. If you found this video helpful, give it a thumbs up. Leave your feedback in the comments below. And title of this video, guys, a trader versus an investor. If you guys want to change your mindset, May 10th, the link will be in the description below. And remember, for those, my YouTube family, there's a link, there's a little code down there that you could use to save you some money. So come on over May 10th, and I guarantee, guys, you will not look at the markets the same, because it takes information to be successful. All right, so until next time, guys, Jay Athens, later.